Very warm welcome to you as you join us on yet another episode of Tax Matters. My name is Olumoyiwa Matuluko. How is business going? We do hope that things are going well and that you do remember to pay your taxes as and when due. In recent times, transfer pricing has gained currency in Nigerian tax circles, and the few times that we have had cause to refer to that subject matter on this program, we've made it clear that transfer pricing is not exactly a new concept in taxation, but that is just that is gradually getting into the consciousness of Nigerian tax authorities. You will recall that we did have a guest on the program in the person of Mr. Ajayi Bamidele, who came to talk about that topic, transfer pricing. And of course, at the 15th Annual Tax Conference, Mr. Gbojunbola, the second guest on this episode of Tax Matters, had a paper presented on his behalf at the 15th Annual Tax Conference on the same subject matter. And so you wonder, what is transfer pricing? That is what today's episode of Tax Matters is all about. Mr. Ajayi Bamidele is the Director, Light Tax Department, Oil and Gas at the Federal Revenue Service, while Mr. Gbojunbola is the Deputy Director in the Tax Policy and Legislation Department, also at the Federal Revenue Service. Gentlemen, you're welcome to Tax Matters.
Thank you very much. Thank you very much.
What exactly is transfer pricing?
Transfer pricing is just a mechanism of transferring goods and services from a related party to another related party.
Does that relate to individuals or companies or both?
Transfer pricing cut across, whether sons and father, mothers and daughter, husband and wife, corporate organizations, and the other. When we are looking in Nigeria consent, the transfer pricing regulation goes beyond the regular consent that looks at cross-border transactions. It also includes transactions that are conducted within the country. Okay. Therefore, it's not only for cross-border transactions that are for multinationals. Yes, primarily multinationals, the international oil companies are greatly involved in it, but it also involves the local and individual organizations. And if you look at the regulation, it made reference to Section 17 of Personal Income Tax Act, which means individuals are also involved in this regime that we talked about.
Okay. Mr. Gbojunbola, no man is an island. No individual is an island, and companies have always related. So why is the relationship between companies and individuals, when they're exchanging goods and services like Mr. Bamidele spoke about, why has it become a problem for the taxman?
Thank you very much. Maybe if we go back to the first question, and then I will just make a very common illustration within our society. We know that Nigeria, we have about 60% of our population engaged in agriculture. So let's look at a simple business. The husband is a farmer producing yam. The wife sells pounded yam. Okay. Now, the wife who sells pounded yam has a choice to buy yam from her husband, the farmer, or to go to the market to buy yam. Now, if he goes to the market to buy yam, he's buying from somebody probably he never knows. And therefore, they will argue on the price. And the woman will ensure she gets the best price. Yes. The seller will also ensure he or she gets the best price. Howbeit, her husband is a producer of yam. So she can as well go to her husband and buy yam. Now, the question now is, at what price does she buy from her husband? Now, if she buys at the same price, which she will have paid if she had gone to the open market, then we can say there is open market price, or what is called arm's length price. But if because the husband is her husband, and she just go there and say, look, I give you what I think I can give you, or the husband insists must pay one price, which probably is going to be higher than what the woman will have paid in the open market, then transfer mispricing has occurred.
Mispricing?
Yes. So the issue, therefore, in transfer pricing It's actually not transfer pricing. But the issue is mass transfer mispricing, where prices are not at open market prices or at arm's length prices.
Okay. What are the implications of that for taxation?
Now, the implication of that for taxation is this. We all know that the taxman is majorly interested in profits. You only pay taxes as a business if you make a profit. And there are two principal elements that determine profits: the price at which you sell your product, the cost at which you buy your inputs. Now, if you are selling to an open market, you want to get the best price for yourself. And by getting the best price, you are maximizing your profit. In the other way, if you are buying your inputs from the open market, you also want to bargain the best price such that your cost is minimized. Again, you are maximizing your profit. Now, if you now have to buy or to sell to someone who is related to you, and the price agreed is not an open market price, then either of two things will have happened. Either one, profit could have been increased out of proportion, or will have been reduced out of proportion. And which means that we're now looking at where this transaction take place across international borders, which means that the two of them are subject to two different tax jurisdictions. Then what happens therefore is that profit will have been shifted from one jurisdiction to another jurisdiction. And then it will be a loss in one jurisdiction and unexplainable gain to the other jurisdiction. That is why the taxman is very, very concerned when transactions occur between connected persons. And the concern is, what price did you use? If it is open market price, there's no issue. But if it is not open market price, then the taxman wants to say, we need to look at what is open market.
We did say in the introduction that it's not as if transfer pricing is a new concept worldwide, but that it's just gaining currency here. We're going to talk about the seminars and workshops that you have been putting together and what you have been telling people at those seminars. But something that Mr. Gbojunbola just spoke about now, about jurisdiction. We noticed that in recent weeks, there has been a lot of talk about these social network platforms. I don't want to mention names. There has been talk about a major coffee seller. You know what I'm talking about? Yeah. And even the advanced countries, the advanced economies are concerned about what those guys are doing. And in fact, at the G8 summit a few weeks ago, this matter also came up. So between the 8 advanced economies, there's even this enthusiasm to make sure that this transfer mispricing, you have given me a new one, is curbed. So how does it work in international business?
Before I even go to that one, just a little addition to what my colleague has actually said. Yes, that is looking at cross-border. Why do we have concern within Nigeria on this issue? Yes, you shift profit from one country to the other. Do you shift profit within Nigeria? The answer is yes. Yes, in the sense that the farmer let's use the same illustration. The farmer may be in the tax net, whereas the pounded yam is doing it under his husband's house known to taxman. The farmer is the only one paying tax. The wife doesn't pay tax. In that case, tax is being hidden and profit can be shifted between the two. But going a little bit, expanding it to companies that are enjoying one incentive or the other. We have companies that are exempted from profit for one reason or the other. When they are arranging their affairs, they will gain. Where they know that the profit is, they build up the cost so that the other part, since they are not going to pay tax on the profit they make because of the incentive they are enjoying, then that one will be having more profit. Whereas the one without a profit, which will be paying tax, will be having lower profit on which to pay tax. That's one. Then why now? Now, in the sense that you need to also encourage foreign direct investment into the country. You need to put your laws, your regulations, everything in place that every other person who is coming to is having certainty about doing business in your country. And with the regulation, the certainty is put there that if you are going to do, these are the things you are going to go through, and this is the position that is going to be addressed.
Okay. Mr. Gbojunbola, my concern is this. Transfer pricing regulations. Yes, laws have always been there. Do you sincerely believe that these regulations will curb the incidence of transfer mispricing? And I will illustrate what I mean by this. At an international seminar, conference rather, that was organized by the Federal Revenue Service a few years ago, the African Tax Forum, a gentleman from Kenya, from the Kenyan Revenue Authority, actually an engineer, and we note with pleasure that even at the FRS, you've been doing this. The gentleman, anytime you went into the nitty-gritty of taxation, would say, talk to my colleague. But as an engineer, his job was very useful. He said that when the telecoms companies, the GSM operators came into Kenya, that they would, in preparing their books, in filing their returns, they will use the prices of equipment purchased from the big companies, French companies, Japanese companies. But that they discovered that the equipment brought into Kenya were from China at cheaper rates, maybe even 1/10 of the price. And so they will say, no, this is not the cost of this, this is the cost of this. Now, with internet, with Google, with all sorts of things, is it not easy to find out the antics of these multinationals? So whoever is bringing in investment into any country, rather than these agreements, what will these regulations do that you cannot do by just being very alert?
Thank you very much. I agree with you that there's a need for alertness. And the alertness is not just on the part of the tax authority, even on the part of the taxpayer.
Okay.
Now, if you listen to Mr. Bamidele, we have ample provisions in our laws. Section 17 of Personal Income Tax Act, Section 20 of Companies Income Tax Act, Section 15 of the Petroleum Profit Tax Act. We have these provisions. Howbeit, they are what we call general provisions that say tax authority, you can do it, but did not specify how is it to be done. Now, what the regulation has come to do is to now specify, taxpayer, in doing this, these are the things you must do. Tax authority, this is the thing you must do. And that brought again the issue of certainty. We want investors in this country. We need to generate jobs for our population, particularly for our young graduates. And how we do that is when we get people coming to invest in our country. But when you ask any investor today, why will you invest in this country? He will ask you, what are the tax codes? What are the things I must do under their tax law? If he's not certain of what is expected of him, he may not come and invest in your country. So the transfer pricing has brought more clarity. The transfer pricing regulation has brought more clarity. Everybody knows what is supposed to do. When do you prepare your documentations? When do you file in? Where do you do it? What can the tax authority do? Are you asking for a ruling in advance of your transaction? All these are fully specified in the regulation. That is one thing that it is done. Now let's talk about sitting down using internet. If it were that easy, there would be no need for a TP regulation anywhere in the world. Now, you also mentioned that the G8 meeting recently discussed, actually they discussed 3 T's. And one of the T's is tax. The second T is transparency. The third T is trade. Now, the T representing tax was on transfer pricing. So that tells you how important it is. Now, who developed the internet? These people were the people who did the internet. So if they could get all these on the internet, there would be no need for presidents.
Like the Kenyan gentleman said, you would not know the price of a TV set in China vis-a-vis its price in Japan or from France. Or if I buy a car made in Germany, and I bring it into Nigeria and call it so amount, are you telling me that by the press of a few keys on the computer, you cannot fault me?
I can tell you, sir, there is a possibility that you may be faulted, but the chances are very slim. Why? You know that even before, we used to have a Peugeot 504.
Yes.
In Peugeot 504, you have L model, GR model, GL model. And then even within GL model, some are hammered panel, but you can't tell by just looking at it. That's just talking about the physical condition of the product. Now, there are other factors that will be there that may not be open to you on the outside. For instance, if somebody is buying just one unit, the price is going to pay. You cannot compare to somebody buying 100 units at the same time. Somebody paying cash, you cannot compare the price you will pay for somebody who is buying on credit. There are so many issues that you will not see on the internet. So it is therefore possible for the same item, looking the same way, apparently doing the same function, yet they will legitimately cost different prices.
So still on that matter, if it is not that open to the naked eye, quote and unquote, what will these regulations do to make me, as that investor, as that multinational, as that businessman, even at the local level, what will make me behave appropriately?
Now, one good thing the transfer pricing regulation has done is to put specific obligations on the taxpayers and on the tax authorities. Okay. One of the obligations is that there must be a disclosure, a voluntary disclosure by the taxpayer. Okay. It is put there by the regulation that if you have any transaction with a related or connected person, you must declare the nature of that transaction. What price you paid for that transaction? What price would you have paid if you had bought from other sources? So you can see the issue of voluntarily coming to tell you the whole story. Then what is the function or what is the obligation of the tax authority? Is to say, look, you can look at what you have been given. You can go and look at prices. There are dedicated sources where we talk about benchmark prices. And then go and look at this transaction. Go and look at comparable transaction. Look at what price that are paid at open market and ensure that you are satisfied that the price that has been reported by this taxpayer is the appropriate price. And when that has been done, then you can move forward. I mean, that is what the TP regulation has done. It has now given specific role so that this issue will come more into the open and most often voluntarily without rancor.
Whether be it again, when I refuse my application after 15 times,
Madam,
let me to look at this my documentation. Shall be complete and cap?
Madam, it's your tax clearance certificate. But they say it is fake.
Fake. She be no see by giving money to help me to collect something.
Madam, you no need to pay shishi to collect your tax clearance certificate.
But you see, who talk say the money go help the thing to come out quick.
To get your tax clearance certificate is easy. Get your company registration certificate, ensure you have paid your tax in the last 3 years, then fill an application form,
and you get it in 2 weeks.
Okay. So now why you seem to playing me, Abi?
In case you are in doubt, just go to any Federal Inland Revenue Service tax office and you will see the tax controller.
Now we are not happy. Just see the thief. No go shopping my money again. Benny motor.
FIRS. It pays to pay your tax.
Welcome back. We are still on to Tax Matters, and our guests are still in the house in the person of Mr. Ajayi Bamidele and Mr. M. Gbojunbola, both of the Federal Inland Revenue Service. And what are we talking about? Transfer pricing, or like they just said, transfer mispricing. Now, we want to look at specific provisions of the transfer pricing regulations, those things that will help Nigeria or indeed any tax jurisdiction in curbing the negative antics of businessmen and women. What can you tell us about specific regulations?
Thank you very much for this. However, before I go into those ones, let me just add one or two things to what my colleague had said earlier on. On your question, what is this regulation going to do to prevent mispricing?
And loss of revenue.
The regulation is there to achieve, in addition to all that have been said, two or three additional things. One, the moment you know that you are going to prepare documentation, and this documentation you are preparing is going to be compared to another organization, then compliance is most likely, and there's every certainty that compliance will improve. Because the moment you are writing it down, you are documenting it. And when you are presenting that documentation, you know you are doing them under oath. And you are going to be held accountable and responsible for whatever you have said and presented. Then there's every likelihood that compliance will improve. And the moment compliance improves, revenue will increase, even without conducting audit or not.
Okay.
Then the other thing that is going to happen again, in addition to what he has said earlier, is that this has now empowered revenue to conduct what we refer to as transfer pricing audit. In conducting the transfer pricing audit, I will now link it with what you said about the international conference. When that man was talking as an engineer, he's not a taxman. And that's the aspect that FRS is moving towards. And it has even started it. We don't employ taxmen, accountants alone now. We employ geologists, we employ engineers.
Marine engineers.
So that with time, telecommunication, oil and gas, aviation, when they say they have acquired X and Y, we agree with them, we trust them because they are our taxpayers. But we now put the test there. That man wouldn't have known that it was made in a taxman, an accountant. We just look at it. This is the
telecoms equipment.
This is the equipment you have bought.
Oh, big.
It's just see gigantic, say, oh, that is true. But an engineer who knows, or somebody who is an ICT man, will know the component, the ICs, and whatever you are saying. He knows the rating. If you say you buy 5, I don't know much about the rating, you buy 5, that's what is in your book. And in the real sense of it, what you have there is 2. The prices cannot be the same.
The inverter can be 10 kV or 5 kV, and I give you the price of 20 kV.
Knowing whether it was manufactured in China, all those are details. And when you are conducting the regular audit, you don't go into all those in depth.
So you are building competencies across professions now.
Now, this is now bringing about, in looking at the transfer pricing audit, it's not just going to go and reconcile figures. No, it goes beyond reconciliation of figures. You go to reconciliation of the economies that you said you have put into place, the business arrangement you have said you have put into the place, the component of even the transaction that you said you have put in place. All this will now be put together. And having known that these are things that somebody is going to test, then the level of lie is likely to be minimized. And as such, the compliance will be high. And then the transparency we are talking about is so good to come on. Now, coming to the regulation itself.
Well, thank you for watching this episode of the program. Let's meet again next week. Same station, same day of the week, same time of the day. Have a good week ahead.